Good morning, everybody. It is June 22nd, 2017. You're taking a look at MarketStream.live and our view on Europe this morning. It's open and trading. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Now, what I'd like to do is just give you some vehicles and some ideas of what's going on in the European continent. It's important. It's anywhere between 10 and 25% of anyone's equity portfolio. And if it's not, then you definitely should be looking at it and sitting down with your advisor and asking them why not. The reason why is not so much diversification. It's really correlated pretty highly to the U.S. markets. It's more towards growth. Where are the opportunities? And that is what this is all about, and this is what we want to give you transparency on. An ETF that you can look at that tracks the top 50 stocks in Europe is the ETF FEZ. Now, in full disclosure, I do have clients exposed to this particular ETF, and it was trading up 2 cents yesterday at 38.59. Now, this trades during our U.S. market open hours. It's not trading at this juncture, but Europe is down right now. Taking a look at the UK. The UK right now is trading down about 0.3%. That's good for 25 points to the downside. And here's what's notable about the UK. Bulls are on their heels. The UK markets have blown through their 20-day and now challenging their 50-day moving average at 74.22. It blew through 74.24, which was the actual moving average. This means that the short-term bulls, they're knocked on their butts. The long-term bulls are now on their heels and they're digging them in. This is a concern. The move in oil, the move in financials because of the lack of inflation, growth may not be as expansive as assumed, and the fact that the consumer, who has been really strong as of late, could this put pressure on the consumer? We're also not seeing global wage inflation, so we want to watch this very closely. The UK is also in the midst of figuring out soft or hard Brexit. There's a lot of political volatility that's picking up post-election. So we're going to watch this one very closely. But right now, today, trading down below its 50-day moving average, just 2 points below. But this gives me context. This starts to make me look at exposure. If you're bullish, then you're going to watch this one very closely. Do I write premium against my long underlying? Whether it's FEZ or individual stocks that are represented either through an ADR or if you actually bought stocks in those marketplaces, which is hard to do, you're going to look at potentially doing option strategies like covered calls. Another area that we want to take a look at, and you can also look at EWU. Now, EWU is an ETF that tracks the UK stocks. This one already had broken through yesterday its 20 and 50-day moving average. Seeing this type of action would now give you context to say that the bears, they're starting to gain some momentum, that the stocks that are represented in EWU are moving to the downside, and they're moving to the downside with some velocity. What's interesting, though, when you look at EWU, the implied volatility wasn't telling you that. To see this type of drop from 34 down to 33, 32 and some change, the expectation was very low that you'd have a violent move. The implied volatility rank, which is the barometer that I use between 0 and 100, 0 being, 0 to 1 being, hey, we don't expect any big violent moves, to 100, we expect huge violent moves, either up or down. Right now, the implied volatility rank is being run at 9.3. This gives me context. So as I see this market dropping, it wasn't anticipated that we would see this kind of drop in one day. We then start to look at why that is occurring, and we see the weakness in oil. We've seen the financials because of the fact that we're not seeing inflation. There's a little bit of geopolitical uncertainty, not only in the UK, you also see it in France. You're seeing how maybe we could see a potential pickup in volatility, but it's not being represented at this time, so this puts context. Taking a look at Germany, which is the largest economy out there. Germany is now in the green, so we have it in the green on the session, up $1.50, but it's straddling right on this 20-day moving average. This is a brutal grind for anybody that's long German stocks. It's just been a grind to the upside. When you take a look at it, most notable name that's to the downside right now in the German markets is Deutsche Bank. So watch the financials. Deutsche Bank's down 1.3% this morning. EWG is an ETF that you can follow. EWG tracks these German stocks, and it's trading actually now at its 50-day moving average. Let's see if this weak open that we've seen so far before the U.S. markets are open in Germany starts to put further pressure on EWG. Now, the EWG ETF is running an 11.3 implied volatility rank. That's telling you that it's still very low. So these big moves, or decent sized moves, these gappy moves, they weren't really expected, but they're not huge by any means. I mean, you're looking at an ETF that basically for the remainder of this week is pricing in about a 32-cent range, either up or down. And up until into next week, about a 64-cent range, which basically is right around a little bit less than 2% either up or down. This gives you context on if it breaks 30.36 today, then you know that the bears could be gaining a little bit of control, because this thing doesn't move a lot. But when it does, you know, a 1-2% move on a weekly basis, you can start seeing how that can add up to the upside or to the downside. So we're going to watch this, and right now I use the moving averages to tell me who is starting to get control. The bulls are still in control, but battling in Germany. Taking a look at the French CAC, the CAC right now is down 16 points at 52.57. Again, right on that 50-day moving average, 52.47, right there. The battle began a couple weeks ago, and it continues. The bulls just have not been able to garner, after the elections, that catalyst to the upside. Taking a look at EWQ, which is the ETF that tracks the French markets, again, in that battle, but it recently got into this space. It wasn't as pronounced as we've seen with the French CAC. We'll see if this opens up under pressure this morning. EWQ is trading at the highest implied volatility rank out of any European ETF. It's trading at an implied volatility rank of 39. That strategically helps me choose the appropriate strategy based on my opinion. If I were to look at this chart, right now the bulls are in control, but they are in a battle. So this would help me understand that outright buying the underlying, especially at these higher levels, and now that it's in a battle, this could be a little bit of a judgment call. So I would use a strategic approach, maybe utilizing option strategies to really define my capital risk while giving me the most optimal, highest probabilistic type of opportunity possible. That's what I do for my clients. If you want to talk more about it, you can always come back to me at jcusick@moneyblock.com. I'd be more than happy to discuss this further. So with the markets now mixed to lower in Europe, let's see how that translates. It looks like the U.S. markets are poised to come in a little bit lower this morning. And so we'll talk about that at 9:30 Eastern, 8:30 Central Time here at MarketStream.live. See you then.